When I really start to look back though, this past week of trading, every time we get down into this 5-day moving average, we bounce. We get down into the 5-day moving average, linear regression, we bounce. We get to the top portion of the linear regression, we trade back down. It's trading very seamless, right? Very orderly. Down and flush the daily 5, flush the linear regression, and then we bounce. Same thing here. Flush, bounce, 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 and we're coming down yet again. So I fully expect this market to get down into prices of at least 23,460s, and if not, 23,450s. And whether that has to happen right now, that's where the confusion can come into for a lot of traders, because a lot of traders will look at the price action or they'll hear a specific level and they'll say, well, I thought we were going down to 460s, 450s, 470s, and it stopped here at 490s, right? Over time, so between today, tomorrow, I would fully expect these levels to get tested, right? And it kind of looks like they're going to get tested pretty soon here. Now, nothing changes structurally on this chart until we close a daily candle below the daily 5. And if that happens, now things start to change a little bit, where maybe we can start looking to the opposite side. So instead of looking for the bounces off of support, because right now, the way the chart is set up, we want to look for these bounces around 470. We want to look for these bounces around 450, 460. We want those bounces. Now, can you short? Can you be short? Sure. There's opportunities. There was opportunity earlier in the day to take a short on a 20 SMA. There was opportunities to take a short through a low of day. There was just an opportunity here on this current hour candle in the past 20 minutes to get short on continuation through the previous hour low. Now, if you're not looking at the hourly chart, you would have never known that you could have gotten short through that. But I want to bring it to everyone's attention because, again, when you really think about it, regardless if you're trading the 1 minute time frame, the 5 minute time frame, you've always got to correlate with the higher time frame. And the higher time frame that I love to correlate my intraday trading with is the 1 hour time frame. The 1 hour time frame has not only saved me, but made me a lot of money. And it gives you a bigger picture where you can kind of find these bigger key levels that you can look to target, look to bounce. And when you look at the chart, even that I'm showing, the chart that I'm showing, this 1 hour chart was nothing but open skies down. So when you start to look at the previous hour channel, so from 7 a.m. Pacific Standard Time, we're talking 10 a.m. Eastern, that candle, the low was 23,514. Okay. Now sitting there patiently waiting for that to get confirmed, because again, if that gets confirmed below that 514, there was nothing in terms of support until we get down to this next area of demand, which is a linear regression at 473. Now, again, it doesn't have to get to 473, but if you're looking at it from a scalper's mentality, looking at it from a day trader's mentality, you don't need to make money from 515 down to 473. The traders who are looking to make those kind of cash outs, those are the traders looking for 3, 4, 5, 6R returns. And those are also the traders who, they need to be comfortable with operating at a 30% win rate, where 7 of these trades are never going to work out, but the one that does is going to make up for everything, and it's going to make your entire week, right? So it's just different ways to skin the cat. But when I look at it from the way that I trade, in my perspective, 23,515 with potential to go to 23,473, why would I not put on a scalp? We're currently trading at 23,497. That's over 15 points, 16 points, 17 points of potential. So when you're looking at it in terms of trading 3 to 5 micros and you're looking to pick up 10 points, well, that's $20 a micro, $20, $40, $60. Now, there's multiple setups that happen throughout the day. The majority of us in here, and I would be very shocked, but the majority of us in here don't just place one trade a day. So what I'm saying by that is you're going to find 2, 3, 4, 5 opportunities throughout the day to take these little 5-point scalps, 10-point scalps, 20-point scalps, 12-point scalps. You're going to find those opportunities in the day. And you're going to get to a certain spot where right now I'm pretty comfortable trading 5 micros on a consistent basis across the board. And when you look at trading 5 micros and picking up something like 10 points, a lot of my trades are between 5 and 10 points. If you go to the higher end of that, you're looking at $20 per 1 micro traded times 5 is a $100 trade, right? 20, 40, 60, 80, 100. Now, if you're looking for 5 points, it's a $50 trade, which is still really, really good. And again, in the mentorship, I've been really working with Viv. And if we kind of go to Viv's profits and losses that they're posting on a daily basis. Now, the profits on a daily basis are a lot smaller. But one thing that I want to emphasize, which is really, really good, is the consistency. I mean, I don't think Viv has posted a red day in quite some time. It's been about almost 2 weeks now, I'm pretty safe to say, and I would have to go back and correct myself if I'm wrong, but just based on the top of my head, those $50 days, those $60 days, they start to add up. It takes a lot of stress off of yourself. It also counts, they're trading with Apex, it also counts as a green day for Apex, getting you 1 day closer to a payout. Now again, yes, I know we have to make $2,600, but they can continue to size up and they can take more trades, or they can take the other route where they just add more funded accounts. And I believe right now they're up to 3 or 4 funded accounts that they're trading across. So a $50 to $60 day across 4 funded accounts is a nice $200 to $250 day. Okay. And it keeps things consistent. Someone else who's also very, very consistent is Burke. So you guys have noticed his P&Ls that he posted in there with multiple different prop firms, over 20 funded accounts. They're right around that sweet spot of $200 to $300 a day, $180 to $250 a day. Looking for the same setups, trading the same small size, in limiting your time in the markets, not trying to catch every single window, not trying to catch every single setup, but dedicating a setup, dedicating a couple of setups to a window is going to help you be very, very consistent. And again, when we think about consistency as a trader, we want this to be boring. We don't want to get too emotional, win or losing. Guys, we're coming right into this linear regression channel. This is playing out perfectly. So I would not start a short position here. That opportunity came a long time ago. I have to make a disclaimer, okay? Because a lot of times us as traders, us as human beings, we don't trust certain things. So there could be a scenario here where it's like, well, I didn't trust that the market was going to go down. I didn't see that happening. So I didn't take the short. So I hear you, what you're saying, that yes, there was short opportunities. Yes, we should have made money short. Yes, we should have been looking short. But you know what? I didn't take that. And I missed the move, you know? And now I'm like the odd man out. I didn't take the short. You know, should I get short now? Should I try to bounce it here now? What should I do? When you run into those situations, because those happen, right? I scalped this move through 515, and I'm going to be honest, I took 7 points on it. You know, how much money did I leave on the table? A lot, right? From 515 to currently trading at 479. I mean, there's, 35 points on the board there, and I took 7 of them. So I have to be okay with myself as well that I didn't catch the whole move, but that's okay. Because what I want to develop for myself and what I'm really trying to focus on for myself is how good can I get at identifying these areas where I can take trades. And for me, I think that, and this is my opinion, but I think that a lot of traders get caught up in how much money can I make on this trade? How much money can I make today? What strategy is going to lead me to making more money? And to be honest, I don't think about the dollar amount. Now, if you were to ask me this same question 10 years ago, the only thing that I was thinking about was what strategy was going to get me to making X amount of dollars. What strategy was going to get me to winning enough trades to where I can make this a full-time income and living. But now the focus isn't about the money, because I know the money follows identifying good setups. So if all I'm trying to do is sit back each and every single day and find those pockets where not I can take the whole move, but just take a little piece of a move, then the money just follows, right? So it's a mindset trick that you have to play with yourself, to where you start getting yourself more comfortable with identifying the good setups and identifying the consistency versus chasing the dollar, right? And a lot of people think that if I just make $100 every day, that's consistent. But what are you doing inside of the process to obtain the $100 that's going to make it consistent? Do we see what I'm saying? So there's a big level of discrepancy there. And again, keep eyes now on the daily 5 SMA sitting at around 443. That's the next area of demand, which is also correlating with yesterday's low. So just keep that on watch. So if anyone is in a short position here, fantastic time to take those profits. Fantastic time, right? Even though there's a little bit of room left, we don't have to squeeze all of the water out of the rock. Remember, we're just trying to be a part of the move. So if anyone was short, not financial advice, of course, but it would be in my best interest to scale those profits. So going back to what I'm saying about the consistency, sometimes, we try to size down and we look for smaller daily profit targets, $50, $100, $200. And we tell ourselves, well, I just need to be consistent doing that, right? But you're completely forgetting about what is going to get you to that consistency. It's not just about taking every trade under the sun or using every setup under the sun to obtain those profits. No, that's not what it's about. It's about what are you doing in your process that is going to allow you to be consistent. Does that make sense? So when you think about it, first things first, and I kind of made a post about it earlier, just a little graphic post, but the idea was, I don't ever really believe when you're just starting off with an evaluation or a funded account, a fresh one, a $50,000 account, that you should be risking more than $250. Now, to some people that's risking too little, and to some people that's risking too much. I'm just giving you my opinion on the sweet spot, right? We can adjust it a little more, a little less, depending on what our averages are, but around 250. Okay. Now that's 10%. That's 10% of your drawdown. You would have to lose, my friends, 10 days in a row before you lost that funded account. Unless your strategy or the way that you trade operates where you lose 10 out of 10 days, it's not impossible, because there's human emotions and tilt that get involved, but it's damn near improbable that you will blow that account. It's damn near improbable. So when you really start to focus on that, the only way that you're losing accounts, even when you're in drawdown, guys, when you're in drawdown today and you don't want to take the loss and maybe tomorrow starts off a little rocky, guys, it's almost improbable that you are going to lose that account. Especially when you're focusing on setups or price action or levels that through back testing and forward testing do not lose 100% of the trades. We want to stick to the best levels, the best time frame, the best window based on your back testing and forward testing, best strategies and setups that are going to win at the highest win rate. So for me, 20 SMAs hit very, very high. Linear regressions hit very, very high. Daily 5-day moving average playing that level, whether it's a confirmation, continuation, or a reversal around that level. It could be using, for me, the 1 hour time frame, making sure I have space like this trade here. We just lost a 20 SMA on the 1 hour time frame. We are well below, well below or at the overnight Asian London high or London low, with a lot of room to the next demand. Those are higher probability setups for me. Now, when I get down into a smaller time frame in the price actions chopping around, then I'm thinking, okay, well, is the market going to pull back? Well, I can catch a little momentum here. That's not really an A plus setup. Now, I can raise my hand to God. I'll pull up a 5-minute time frame. I'll give you an example of what I'm talking about. Okay, so let's look at this 5-minute chart here. You see how we kind of pull back off the open here? We pull back after the pop, we pull back, we touch the linear regression. There's times where I'm watching this and I'm like, okay, we're going to bounce off this linear regression, you know, but we're still below the 20 and we're still below high of day. And I'll say, well, I can catch a little momentum, and I kind of jump in right here. And then the candle pulls back. That's not an A plus setup. That's an idea. That's a probability that maybe that setup can work, but that's not like a high probability setup for me. You know what I'm saying? Like, and how many times throughout the day, how many times throughout the week do we do that, right? Here's your bounce right off of the daily 5, guys. Just want to make that note. Here's your first initial bounce, 39-point bounce right off of the daily 5. But how many times do we do that, right? How many times do we do that? Where we're kind of looking at something, or we tell ourselves, okay, market's pushing down, you know, well, let me just, we're losing this linear regression, it's the candle still printing, let me go short here, and then it bounces, and then it's going against you 25 points, you take the loss, only to see it look back 20-30 minutes later to see that you would have made money if you just would have held. Like, how many times are we taking setups in the day where we're not 100% confident in that setup because we haven't taken it at least 100 times? Does that make sense? Right? But like, for me, waiting for this 20 SMA to get confirmed, meaning it closes below the 20 SMA and then jumping in on the following candle when it confirms, I've taken that trade thousands of times, right? Looking at a 1-hour chart and telling myself, okay, well, we've traded all the way down to the Asian session low or London low. We've lost the 20 SMA. I've got a lot of space here. There's nothing but opportunity. How many times have I traded this type of setup where I'm looking at the hourly candle with room, with potential, and then taking a short or taking a long if there's room and potential? Hundreds and hundreds of times. So I'm going to trust that setup. You know, 30-minute opening range, waiting for that 30-minute opening range to get set, waiting for a following candle to break it, right? Set me a new high or low, which now becomes my pivot, and then waiting for following price action to confirm that new high or low. How many times have I taken that? Hundreds and hundreds of times. Those are setups to me where if I lose on them, I can live with that, you know? But it's the setups where, you know, I'm kind of just watching price action. Like, for example, okay, we bounced off of this daily 5. Well, the opportunity to take this bounce was trying to catch it as low to the daily 5 as possible. So that way we have easy risk, right? Meaning if we get in on this candle that bounced off of the daily 5, I would rather lose on that on a closure below the daily 5 than to tell myself, okay, we're pushing up. Let me just jump in at the top, and then it pulls back, I don't know, 13 points. And then now I'm like, you know, all nervous and I have to get out of the trade or something. Now, it doesn't mean that this trade's going to go lower. We could definitely confirm. But another idea is, well, how about instead of, you know, jumping in at the top of this candle, you just wait for this candle to get confirmed, right? Wait for the green candle to get confirmed. And then you maybe got room back up to backtest this 515. And if you lose on that trade, well, then, hey, you know, you lost on that trade. But what I'm trying to, you know, the message I'm trying to pass is that instead of taking those trades where it's like, oh, I think the market's going to do this, let me just jump in here, let's eliminate those altogether. And let's just only take trades that we've back tested or we've taken 100 times before. Now, again, I'm just speaking hypothetically. You know, don't sit there and think to yourself, well, I don't know if I've taken that particular setup 100 times, so I remember him mentioning that, so I shouldn't take it. I'm speaking hypothetically. Like make sure that it's not like just a fugazi trade, like something that you just, you know, take here, take there, take here, take there. It's here, it's there. You know, it's like, make sure there's setups that you've taken before and you know how to interact with them when they go in your favor and when they go against you, right? You know what your stop loss is going to be if the trade doesn't work, and you know what you're normally looking for when the trade works out in your favor, right? Like, let's not just say, hey, well, I seen this random strategy on YouTube, let me just try testing this for a month. I'm sure everyone has traded before. You guys have all been here trading. You guys, and it don't even have to be my strategies, guys. You guys have your own individual ways of trading. That's completely fine. Like I said, there's a million ways to skin this cat. I just want everyone to focus on the strategies that you know, instead of constantly searching for new things that are going to maybe make your overall process better. What's going to make your overall process better is doing the hard work that many people don't want to do because they want things to be easier. Things are not going to be easier. Things will become boring. They will become more boring. And we can argue that boring means easy, easy means boring, but there's no easier way to do this. Okay, so that's what I really want you guys to focus on, is only, and I mean only, and if you can do this, you're going to see a lot of success. And just give me 5 days. Like, just go read the post that I put in the Pursuit to 3K challenge. Just read that post. If you only stick to your highest probability setups, regardless of markets flushing and I feel like it's a great time to jump in here, you let those trades go because you're only sticking to your specific setups, limited to 1 or 2 setups even, right? And you focus on those highest probability setups that you know in the back of your mind through muscle memory. When you take those setups, they work 7 out of 10 times. They work 6 out of 10 times. And you only focus on trading those and leave everything out the door. I guarantee you this business will become a lot more boring. You will find a lot more consistency in this business, right? It's trying to jumble in too many setups. Oh, price action's going down and we lost this. It's also a 20 play and we're losing this level. And you're trying to put too much sauce, okay, in the pasta. Like you're putting too much sauce, right? Like you're adding too many onions to the sauce is what I'm trying to say. So you don't want to add all those onions to the sauce. You want to focus on 1 or 2 specific setups. You want to wait for them to happen, right? And instead of being a child and throwing a fit, well, everyone else is making money and I'm sitting here waiting for my setup and I didn't get it. Stop complaining, okay? Stop complaining. Stop crying. Stop playing the victim. There's plenty of opportunity in this market for everyone to eat. All of us are not in competition with each other. We are not, like, my winning trade does not take away from you. Your winning trade does not take away from the next person, okay? There's plenty of opportunity for everyone to eat in this business, and that's the beauty of this business, okay? So you're going to get your opportunities and you're going to do a lot better when you stick to those rules and those consistencies. And again, I know that that's the boring stuff, guys. It's the boring stuff. You want to make more money, you need more size. You want to have more size, you need more money, right? So at the end of the day, someone who takes 5 points on a trade and is trading, 5 micros, making $50 on it, there's someone out there trading 5 minis, okay, making $500. It's all relative. Does that make sense? It's all relative, right? To the guy who has 10 funded accounts making $50, $500 a day, there's a guy out there making 10 that has 10 funded accounts trading 5 mini contracts, making $500 an account, making $5,000 a day. Does that make sense? It's all relative. Okay? Don't compare yourself to the people who you've seen doing that. Well, what are they doing? How come they're doing it, but I can't? It's size, my friends. It's size. And how do you put on more size? You need more money. You need to have a less of emotional attachment to those PA accounts that you have, those funded accounts that you have, those evaluations that you have. Because the people who are doing that, and I've done it before to get myself up to like 8 or 9 funded accounts, there's portions and times where I deviate with how many funded accounts I have. I've been as low as 7 in taking out profits, and I've been as high as right now, I'm at 17. I could go for more. I'm just too lazy. I'm too anxious. I'm too lazy. I don't like trading for nothing, right? I don't like trading for nothing. So I try to stick to my funded accounts as much as possible and then just kind of sprinkle in those stupid evaluations. But when you think about it, and now we have just touched the daily 5. We've actually touched it now. We came about 5-6 points, 6 hairs off of it the last time, but this is actually a back test now. So what I would be focusing on for the rest of the day is, what does price action do from here? You know, what does price action do from here? Do we continue to close today's session below the daily 5? Things will change tomorrow. We will look for bounces that get rejected into supply to go short. If we aggressively stand off of this daily 5, and at some point in time today we reclaim it and we bounce off of it, again, nothing has changed. You're still looking to the long side, right? And you're only looking to really short when you hit the upper extremes. So when you look at it, again, I kind of deviated from the other point I was making, but when you look at the upper extremes, would you say the upper linear regression or the bottom linear regression is a good time to short, right? Should we be shorting at the upper linear regression at all-time highs, or should we be shorting at the bottom at support? So you only are going against a trend when you're at the upper extremes. It'd be the same way if we were trading below this linear regression, the downside one. We're trading below the daily 5, where, okay, maybe now you're not looking to bounce so much. Maybe you're looking for the bounces to play the rejections, right? So only go against a trend when you're at the extremes. But like when you're in the middle of the ranges, the pullbacks and stuff that you're getting in the middle of the ranges, you're looking to stay with the trend, right? A lot of the times until you get to the upper or lower extremes. And then you're looking to kind of flip it around a little bit. But so I hope what I said kind of makes sense, right? Again, you know, we don't need to get too caught up in the numbers and, you know, what the potential is, but the inconsistencies in your trading and my trading and everyone out there who trades, they really boil down to us and ego and not accepting these things and being too emotional and too attached and all of this other stuff. And it's like, that's the golden ticket, right? It's, you know, what is the reason why we go on tilt? You know, at the end of the day, we're competitive people by nature. We want to win. We don't want to settle. But you got to settle. You got to settle sometimes. You know, what helps with that is having more accounts. One, you know, go out there and go buy some more valuations and go trade or whatever. And I'll tell you like this, and I'll tell you very frank. If you don't have money to go out there and go buy more valuations to trade more, you probably shouldn't be trading in the first place, right? It's just like this. I used to tell people all the time when I used to teach people how to trade options. It's, you know, if you have $1,000 in your account and you're trying to trade options and you're trying to buy a premium for $500, $800, and you lose that trade, you probably don't have enough money to be trading. You should be trading premium for 50 to 100 bucks max, right? You want to control that risk a little bit. So nothing changes here in the prop firm space. You know, what makes it easier? What do you think would be an easier feeling? Losing $50 when you have $50,000 account, or what would feel worse? Losing $50 when you have a $50,000 account, cash account, real money account. I'm talking about trading options, trading stocks, or losing $500 when you only have $1,000 in your account, right? What's going to feel worse, right? I don't think anyone, you know, that's going to be rocket science, but it's the same thing when it comes to props, right? If you've only got 5-6 accounts and you're copy trading all of them, and you go down $300 and you're already down $500 on the week, that's going to feel a lot worse than if you've got 20 accounts sitting around and, you know, 10 of them are positive $1,000, a couple of them are break even. You're not really going to care too much. But we're putting too much emphasis in how much we care about these prop firms. Prop firms and getting payouts has nothing to do with being a good trader. And I think I've mentioned that before, right? I think I've mentioned that before. It's nothing like trading real capital. The mindset, the psychology, nothing, the managing of it, nothing is the same. And I can speak to that and I can attest to that because I trade real capital. And it's night and day. Prop firms is a game. Whether you want to believe that or not, it is a game. And the game is only one, and I'm gonna probably blow a lot of your guys' minds. Even when you see that person on YouTube and, oh, well, this guy made $20,000 today. I'm not saying that they didn't do it, but you're not understanding that money is all relative to how much money you actually have. Okay. So you know who gets bit by the bug where it's like, well, I seen this one person, he trades this strategy and he makes $20,000 a day trading this strategy. Money is relative, my friend. You don't have as much money as him, and that's the cold hard truth. That's the cold hard truth. You don't have as much money invested into these accounts and these prop firms and have money ready to go to buy more accounts to continue to do this. That's why you're never going to obtain that. You're never going to obtain that. That's the harsh truth. Now you can definitely invest more money and try to shoot for those numbers, but you gotta be okay with losing some bigger cash along the way, right? It's just like going back to the options trading thing that I'm saying. A guy who has $50,000 in his account can afford to lose $1,000 a trade. No sweat. The guy who has $1,000 in an account can't afford to lose it, right? But then he's always at the guy who's trading the $1,000 account is asking, well, how does this person I seen when they made a good trade, they made $5,000? How do you think they did that? They have more size. They're not as worried about losing $1,000 trade, right? So it's the same thing in prop firms. Prop firms are a game. The way you win at these prop firms is by trading like the house. What does that mean? Trading small size, small consistent days. What do the prop firms try to preach to you? Trade consistent, blah, blah, blah. Minimum days of this, minimum days of that. You know, $50 minimum days with Apex, $2,600, copy trade 20 accounts, consistency, right? A lot of people think that that's all a bunch of bullshit, that they're just saying that because they want you to blow accounts. Of course they want you to blow accounts. That's how they make money. They want you to blow accounts because you know what? People are stupid. People are stupid. They're not going to trade small. They're not going to shoot for a $50 day. They're just not going to do it. They're not going to do it. You know why? Because they're greedy. It's human nature. It's human nature, guys. You know, but what they're telling you to do is actually the way to win the game. And it's almost reverse psychology. It's almost reverse psychology. Trade small, copy trade times 20 accounts. Obtain $50 a day, copy trade 20 accounts. Consistency. Stay within these rules. Don't go over 30% drawdown. Don't do this. By the more you tell someone to do something, the less they do it. And then what you do as a person is try to cherry pick what you like out of those rules and do it your way. Well, I like the fact I can have 20 accounts. I don't like the fact I should be making $50 a day. I like the fact that I can have 20 accounts and make $1,000 a day. Because I seen Joe Dirt on YouTube make $30,000 today trading this magic strategy, this magic indicator. And I want to be like him. He can do it. There's other people who say they can do it. I want to be like them. So do you see how the masses, the sheep, play into what the prop firms want? And what do they want? For you to continue to buy evaluations and for you to buy rebuys and pay activation fees. By telling you to do something, you're going to do the opposite and you're going to cherry pick one thing from that. So when I really started to go through this, what is the way that you're going to be successful? How are you going to win at this game? Consistency, one, we know that. What does that mean? Trade smaller size. I need to be able to handle the emotions because in trading emotions come up. So I need to handle those emotions. That's one. So how am I going to handle my emotions? Trade small size. Okay, great. Now that problem's taken care of, I don't want to make $50 a day. I can't even wipe my ass with $50 a day, guys. I can't even buy a cup of coffee here in California for $50. Can't even fill up the gas tank with $50. So I can't wipe my ass with $50. But what can I do? I can have 10 accounts making $50 a day. That's how money works. And I come from a background before trading, the prior business that I was in a direct to consumer as well as a B2B industry where we manufactured a product, we put it in stores, and we sold it direct to consumer. Okay. So I had a sales team, I had a manufacturing plant, I had a shipping and receiving warehouse. I understand logistics in terms of the more units I sell at a lower dollar amount will eat market share and I will make steady income because I will have the market share because my price per unit is lower. Now my profits are lower, but it's more consistent because I'm doing more units. Does that make sense? So instead of having just a couple of accounts and trying to, I'm talking about prop firms, having just a couple of accounts or 5 accounts or 10 accounts and trying to go for that $500 a day, $1,000 a day, why don't you go get 20 accounts, go for $50 a day, go for $100 a day? A lot less stress, a lot easier to do. It's all the same money in the end. You're still getting paid, but it's going to take longer to get paid. Stop your crying. How much money did you make last month from prop firms? Ask yourself that every time you start crying about some stupid excuse as to what these other people are doing or why you're not being consistent. Aggressive bounce here, by the way, I might add. Off of what, guys? Off of what? Daily 5, linear regression. Now I'm done trading on the day. So there's a point in time where it's like you watch these setups and you wish that you were involved in them. But, you know, what am I going to do? Chase it here now into my 5-minute 20 SMA? Is that really what I'm going to do? No, right? No. So, you know, use it as a learning experience. You don't have to trade every setup. You can bank this memory, right, for next time. I remember that one day we sold all the way off into these big old macro levels here and what the reaction was. What was the initial reaction? And it's not like we're just drawing these lines on the chart after the fact. These effing lines, these freaking lines were on the chart prior to the drop. Like a magnet, they gravitated towards there, and like a trampoline, they bounced off of it. Now, does it happen every time? No, but it happens more times than it doesn't. It happens more times than it doesn't.